Hi everyone. I am making this diary not according to the previously stated plan, and that is because something happened on the market. You may have heard the news about the whole SEC Binance thing, and that calls for sort of an emergency diary. Something happened on the market, and I want to show you how that affected my trading. This is one of those examples where seemingly external circumstances actually impact how the market behaves and what can be expected of it. Well, actually, if you look at my reports, there hasn't really been that much going on, so I was not too much affected by all the market volatility, but still we can draw some conclusions and highlight some interesting points. First, I would like to say that in preparation for making a real algorithm, I turned off my emulation algorithms that have been performing quite well on the flat market. But unfortunately, because they were off during the whole market volatility thing, I am unable to show you any real statistical data, and I can only make some educated guesses about how these algorithms would have performed in a volatile market. But we'll get to that more towards the end of the video. First, let's take a look at the real trades that I've had during that period. So these are the top 3 here. One interesting thing that I have first noticed about this is that finally my algorithms that are placing orders at the distance of 1.32 have actually produced some results. You may remember that these are all 50 plus leveraged coins and they are not so prone to be very volatile. And previous trades were at the distance of 1, and now we have 1.3, which is an indicator that something happened on the market and these coins behaved in somewhat an unusual manner for them. Yeah, I have to note that in my algorithms, I've turned these one off, but then I turned on the 1.2 distance. Previously, I was only trading a distance of 1. Now, let's verify that there has been volatility on the market. And to do that, the usual thing is to look at Bitcoin. Here it is. It doesn't look so big, but check out the scale. Right now, we're at about 20%. So here, this timeline, about 3 o'clock, that's when the announcement was made, that's when the news came in, and look what happened to Bitcoin. Let me move this out of the way. So more or less flat, and then it started dropping. And let's measure in the first hour, let's say it dropped 5.7%, and then it regained a little bit of its price. And right now, if you look at the 24-hour change, it's about -4%. So it bounced back a little bit. So let's see if other coins followed. In my trades here, one interesting trade is this one, the BNB. You may remember that BNB is Binance's own coin, and since the news is directly related to this exchange, let's see what happened with BNB and what this trade looks like. Here it is. Here is my trade, but let's look at the context first. So prior to that, BNB was very, very flat. Nothing going on, and then right at 3 o'clock, it started going down. Again, let's check out the scale. Let's say 10%. Okay, so right at the moment when the news came in, it started going down. It was not an immediate drop. It had this sort of like a saw pattern, and that's where I got my trade. If we zoom in a little bit, Yeah, you can see there were lots and lots of shots. Unfortunately, I do not have my order lines because it has been a while. I think they are only kept for 1 hour, or they're kept for longer if your terminal is running. But since this happened, I have closed and reopened my terminal, so these lines are not here. So I think we zoomed all the way in. It's very hard to figure out what exactly happened here. It was all going crazy. But the distance here was 1.3. Let's try and figure out where the position, where the shot started that opened my position. So somewhere around here. Somewhere around there the position was opened, and then we took profit over here. And the take profit level is actually over 0.6%, even though in my algorithm the take profit level is 0.2%. So this was a squeeze, but a good one from my point of view. I've earned more than I could have. So at this point where the take profit order was placed, the price was here. It was above the take profit level from the algorithm, and we got more than we could otherwise. The interesting thing about BNB specifically is that it is a 75 leveraged coin. So Binance trusts its own coin quite a lot. And usually its behavior is quite flat. If we zoom all the way out into the past, you see it's very flat. But now with the news, it became volatile. This is very unusual behavior without any external influence. Yeah, you see what happened. So for 75 leverage, this is a big deal. Next, let's take a look at a couple of other trades. Going back to the reports, we have send here. We have 2 trades. One is at the distance of 1.3 and the other at a distance of 1. And you see the same coin, the same time, but the results are different. And the most different thing about them is the distance. So let's see what that looks like. Here we are. It was more or less flat before, and then we have a shot. Let's see the size of it. The size is 1.4, and this is more or less classic shot. This position was opened at about 1, which is exactly as the algorithm says, and this one at 1.3. Again, perfect opening. Then let's see what happened next. The first trade that was at a smaller distance is a loss. So the shot went down, did not roll back all the way up to here. This is where the take profit was for this trade. And we closed at a stop, which was about 0.5%. Nothing we can do will save us here. Now the second trade closed at a profit. And you cannot see where the stop loss line was here, but it was supposed to be about 0.5%. So it's somewhere down here. The graph never touched this level. Well, also, actually, the stop loss order didn't even happen. I will tell you a bit later about that. So here we got really quickly a profit of about 0.2%, which is exactly what the algorithm says. So this right here was the perfect execution of the way my algorithms were set up. Now, why do I have 2 orders at the same time? It's like right here. You see, I have 2 orders. So the idea with having 2 orders is that if you have smaller shots, they can touch this lower level and get you some profits. Now, with this one, I look at it sort of as a backup. If the shot goes past your first level and you get a loss, you can get a profit here to compensate at least a little bit the losses that you have here. Sometimes the shot is so perfect that you get profit on both of these, but in this particular case, that did not happen. So let's see at the actual values. So the profitable trade gave me 15 cents at the order of $100. And this one gave me a loss of almost 58 cents. So out of that loss, I compensated 15 cents for a total result of minus 42 cents. At least it's not minus 58. So it's a bit better. Sometimes both of these levels can be pierced and both of them are a loss. So in this case, having two levels is not as fortunate, It can go either way. You can lose on both, you can make profit on both, or you can win on one and lose on the other. As usual, I keep repeating, it's all about balance. Trying to find the setup that balances out the losses with wins. In this case, the balance is negative, but that's fine. With BNB, I only had one trade, and the reason is that I did not use two levels of orders for BNB. We can go to my algorithms, filter them by BNB, and here you see that I only run a 132 algorithm with this distance for BNB. Now, what are these two? Those are algorithms specifically dedicated to a very volatile market. And you may ask, why didn't I get more trades here if I had algorithms specifically targeted for a volatile market? Well, first of all, let's see what the setup is for volatility. Right here, this algorithm, the lower distance one, works when the 5-minute absolute delta for Bitcoin is between 0 and 0.7. So this is an amplitude. If it is within those numbers, the lower ones work. Once it gets above 0.7, then another set of algorithms is turned on, and it would be 292. That's quite a big distance. If we were to remove the filters, I have another set here, which is usually at the distance of 1, but then it switches to 2.5 when the market gets volatile. So these trades right here, we got only at the very start of the volatility. This is before the amplitude of Bitcoin surpassed the value of 0.7. And then, again, I don't see my orders here because they have been purged. But after that, my distance was probably pretty high and no shots reached it. Again, these are 50 and above leveraged coins. They are not so prone to volatility. So with my algorithms here, probably for this selection of coins, these distances of 2.9 and 2.5 are too large. In this particular market move, no shots have reached there. And that's why I missed out on a lot of the action probably. So I have to rethink the different parameters that I have in terms of distances and the threshold for Bitcoin volatility and switching from a lower distance to a higher distance. Well, actually, one more thing I just thought of. Right here, where I said this one is to compensate for the loss on a lower distance. It did not compensate fully because my take is 0.2 and my stop loss is 0.5. But we could set this order at a higher order size. So if we had like 3 times the order size, then this profit would fully compensate for this loss. Could be. It's one more thing I could do to compensate. Okay, so these were my trades for the volatile market. But as you may see, I have another set of trades here. It's Gala, and it happened before this whole market move. So let's see what happened with Gala. We have these shots right here. Well, actually, there's one shot with 2 levels, same as I had before on Sand. And I got 2 profits. What is interesting is that the size of the shot was a bit over 1.5. And usually that would be too large and I would close at stop loss. But here we have 2 profits and the stop losses are right here. They have been canceled. So what happened? There is a function in the algorithm called stop loss delay. Well, let's actually see what it's called. Here, stop loss. Yeah, it's stop loss delay, and I have it set at 1 second. So what does that mean? That means once the position is opened, the algorithm waits 1 second before engaging the stop loss. So this is exactly what we have here. You can see that the stop loss started right here, and then it got canceled because we have profits here. So if I did not have this delay, my stop losses would have been here, and I would have lost both trades. But here, due to the delay, I managed to get 2 profits. This is actually not cure for all, because here it got a little bit of extra time for the price to roll back, which is exactly what happened. However, here on Sand, I also had this delay, but once the stop loss was engaged, the price was here. It was at this particular level where the stop loss is activated. So I got a loss even though I had this delay. So there is no magic here. It's all about how you set up your algorithm for a particular market scenario. So here we finally have some real trades. It's not a lot, but we could get some interesting information and insight from them. Now let's go back to my emulators and try and have an educated guess about what would have happened if these were turned on during the volatility. So the distance that they used is 0.6%. And that's quite a small distance. You see that here, even on the quite stable coins, the distances of 1.3 were triggered. So if we look at Market Live right now, let's sort by 24-hour relative delta. That means how much the coin gained or lost in the last 24 hours. So with this whole thing, with the news, only 3 coins moved up. It's MTL, Kava, and BTC DOM. This one is pretty much always stable. But what's more interesting is about the rest of the coins. All of them went down. But the important thing is not the fact that they went down, but the magnitude of it. So here we have the most volatile coin in the last 24 hours, which is IDU. It's dropped over 18%. And with my active markets algorithm right here, this coin would have definitely been selected for order placement. So let's see what happened with IDU exactly at the point where the news came in and the volatility started. This is what happened. It was not so flat, but it was not going too crazy. See here, the scale is almost 50%. Yeah, now it's 50. And to measure this drop, we actually have to zoom even more out. So the overall drop was at first minus 32%. Then it bounced back. Now it's hovering somewhere around here. The 24-hour, as we've seen, is minus 18%. So this coin was volatile, but these are not really shots. It's a compressed version of it. Let's now zoom in and try and find some shots which we would have placed orders on if my emulation algorithms were running. Now let's zoom in. We have to do a lot of zooming in. Now we're at a usual scale of about 5%. Let's see these shots. Okay, this looks like a shot. That's not so big, 1%. Let's find some crazier shots. Oh. Like this one, for example. No, not this one. Okay, so I've been searching for shots for a while now and trying to measure them. A lot of them are around 1%. This right here, around 1%. Well, these are also a bit below 1%, but I don't see them rolling back too much. Like this one, 1.6, but it's really going crazy, and by just looking at it, I cannot really predict what would have happened with my algorithm. It's quite sad that I was not running the algorithms at this moment in time. And 1%, well, if you have 1%ers, maybe the distance of 0.6 is not exactly perfect for this. Like this one, again, near 1%. I cannot really make a guess as to what would have happened. I thought it was gonna be huge shots and that would get me stop lost all the time, but I cannot find any confirmation for that. Even though this coin was going crazy, just by looking at it with my limited experience, I cannot say what would have happened. Now, this right here is quite crazy looking. It's about 1.28. Well, maybe if we were at the distance of 1, we could have gotten something, but this is all conjecture. Fortunately, no real data exists in my terminal. Maybe we could look at another coin that lost a lot. Well, now it's this one. It's high. Let's see what it was doing during the whole market activity. Yeah, so here is the time, about 3 o'clock. We also see a drop. You see, this just proves that pretty much all coins are following Bitcoin. Now, what about them shots? Well, here I found this shot that was about 1.2%. Again, nothing too crazy. So cannot make a definitive conclusion still. So this is more or less it for my review of how this event affected my trading. Again, there was not too much effect, but interesting things come out of this. And I think I am reinforced now in the idea that for my active markets algorithm that I'm gonna build, I would need to take into account Bitcoin volatility, have some sort of cap where I either stop the algorithms from trading at very low distances here, or I move the distance up once a certain level of volatility is achieved. So now I'm back on track. I will start building the real algorithm, and I will show you the process in the next video, unless again something as dramatic as this happens. I will see you next time.